Welcome to my channel. I'm Scott, and in this video I'm going to walk you through the process of valuing Grab Holdings stock by analyzing their financial statements and dissecting their financial ratios so we can determine if it's a buy or a sell. Let's get started with the model. This is a large cap company, 12.5 billion market cap. They're trading at $3.19 a share, and they have 3.9 billion shares outstanding. This company is the developer of an app for ride-hailing, food delivery, and digital payments. It operates in Singapore, Malaysia, Cambodia, Indonesia, Myanmar, the Philippines, Thailand, and Vietnam. Grab was founded in 2012 to make taxi rides safer in Malaysia. By 2016, it rebranded as Grab with an expansion of partnerships in Southeast Asia. This company is Southeast Asia's biggest technology startup. It became public in 2021 via a SPAC merger. Last year, it was amongst the most innovative companies in APAC. Let's look at their financials. The way you value a company is you estimate the free cash flows into the future, and then you discount those numbers back to today's value. That's what we're doing in this video. And free cash flow is cash flow from operations minus capital expenditures. Free cash flow negative every year, but it's almost positive in 2023, a small negative. Net income is the profit or loss on the income statement. It's revenue minus expenses. Really big negatives, but they did have their smallest negative in 2023. It looks like they might be profitable in 2024. Revenue is a sales to the company, and that looks amazing. Under $500 million to $2.4 billion. It grew 112% in 2022. It grew 65% in 2023. We estimated 4 years of future free cash flows. We also estimated the terminal value with all cash flows past year 4, that's $12.5 billion. We discounted those numbers back to today using the weighted average cost of capital. We get a value of the company of $10 billion. We divide that by 3.9 billion shares. And that gives us a stock price of $264. They're trading at $3.19, so they're trading at a 21% premium. It's a sell according to the model. This definitely could be a company you want to do a little more deeper due diligence on, because there is potential for a 10-bagger in the next few years, because they're in a hot industry and they have a ton of people where they operate. There are 242 companies in the same industry as Grab, and if they have a number in red, they're worse than the median. If they have a number in blue, they're better. They spend a little more than the average in CapEx, $43 million. CapEx is the investments in property, plant, and equipment. Some companies also capitalize software. They don't have much debt. Their debt to equity ratio is the best at 0.1. For every dollar of equity, they have 10 cents of debt. Still generating negative free cash flow. They rank 29th in market cap of the 242 companies, higher than the median average. They have a really good price to book. They're trading at 2 times book value. Price to book is stock price over book value per share. The reason it says NA for PE is because they have negative earnings. The reason it says NA for price to free cash flow is because they have negative free cash flow. They have a good price of sales, 5.7. They're trading at a little better than 6 times revenue, which means their market cap is about 6 times their revenue. They generate more revenue than the average. We can't look at their 5-year annual revenue growth rate. They have not been public that long. If you put $10,000 into this company when they started trading, you'd be really unhappy at $2,600, down 73%. Let's look at their most recent earnings presentation slides. And this is for Q4 2023. Revenue up 30% year over year. GMV up 18% year over year. Adjusted EBITDA, $35 million. That's a big improvement. It improved $146 million year over year. So they went from negative $111 million to positive $35 million. In 2017, they acquired Kudo, an Indonesian fintech company. Then in 2018, they acquired another fintech company. That's why you see loans in their presentation. They loan out money to individuals and small businesses. And their loan book grew 57% year over year. It was a little under $1 billion in 2022. It got up to $1.5 billion in 2023. Their loan book tripled from 2020 to 2021. They also have exposure into digital banks. Their Singapore arm, GXS Bank, over 80% of the people who receive a loan also have a bank account. Their Malaysian arm has over 100,000 depositors within 2 weeks of launch in 2023. Their GMV, gross merchandise value, was $5.4 billion for the quarter, up from $5 billion. That's up 9%. On-demand GMV, that's ride-hailing, also deliveries, 4.1 billion, up 18%. MTU, monthly transactional users, 38 million, up 12%. But the GMV per MTU has gone down. It went down 3%. Each person spends $144 for the quarter. That's down from $149. They also have partner and consumer incentives. That's why they measure things in GMV. GMV is a total cost to the user, but the company doesn't receive all that money. It has to share it with their partners. Revenue is up big, up 30%, 500 million to 650 million. And they had a profit in the fourth quarter of 11 million. Last year they had a loss of 391 million. I think this may be their first profitable quarter. EBITDA more than double, 112 million to 228 million. Earnings before interest, taxes, depreciation, and amortization. Adjusted EBITDA is positive 35 million from negative 111 million. Negative 26 million in operating cash flow. Free cash flow is positive 1 million. That's adjusted free cash flow. For the full year, GMV up 5%. It's 21 billion, up from 20 billion. On demand, their core product, 15.5 billion, up from 14 billion. That's up 12%. Monthly users, 35.5 million, up 8%. But each user is spending less money, 3% less than last year. Revenue jumped up a lot. It's up 65% from 1.4 billion to 2.4 billion. But they had a loss for the year, a loss of 485 million, compared to last year of a loss of 1.7 billion. But their EBITDA has grown a lot, 65 million to 770 million. Adjusted EBITDA is negative though, but the negative is really small. Positive operating cash flow, that's a big win. They had a negative 800 million last year. But adjusted free cash flow is negative, but the negative is getting better. They have a lot of cash on their balance sheet, 3.1 billion. It was 2 billion at the end of 2022, so it's gone up quite a bit the past few quarters. Their net cash, which is cash minus debt, 5.2 billion, similar to last year of 5.1 billion. Their delivery revenue is up 20% year over year. GMV up 13%, EBITDA up 107%. Mobility is up also 24% for revenue, 27% for GMV, 20% for EBITDA. FinTech revenue doubled from last year. That's Q4 2023 to Q4 2022. Total payment volume is up 6%. EBITDA improved, the negative is getting a little smaller. If you want to understand how they calculate adjusted EBITDA, this is for the fourth quarter. They had net income of 11 million. EBITDA's earnings is 11 million before I for interest, T for taxes, D for depreciation, and A for amortization. Interest, which means they have to strip out ITDA. Interest, negative 35 million. Taxes, negative 4 million. Depreciation, 37 million. And it's called adjusted, so they also throw in stock-based compensation and other things. So adjusted EBITDA is positive 35 million for the quarter. Still negative for 2023, negative 22 million, but a big improvement. It was negative 8 million in 22. To calculate adjusted free cash flow, you take operating cash flow, negative 26 million, minus CapEx, negative 38 million. So regular free cash flow is negative 64 million. Adjusted free cash flow is they adjust for loans receivables, 65 million. That's a cash inflow of 65 million. So positive 1 million for adjusted free cash flow. Let's look at the company on Simply Wall Street. Its last price, 317, 13 billion market cap, up 3% in the past week, up 11% in the past year. Let's see what they say about the company. Grab has a super app in Cambodia, Indonesia, Malaysia, Myanmar, the Philippines, Singapore, Thailand, and Vietnam. They offer its Grab ecosystem, a single platform with super apps for driver and merchant partners and consumers that allows access to mobility, delivery, digital financial services, and enterprise sector of offerings. The company is headquartered in Singapore. This is the stock price since they started trading. It looks like a pretty grim chart. It looks like it IPO'd at the end of 2020 around $12. It didn't get that much higher than that. Its peak was at the end of 2021 around $15. So November 2021, $15. December 2021 cut in half to 7. 3 months later, in March 2022, it fell to 3. Then in mid-2022, it dropped to its lowest point, $2.31. It's been trading in a fairly tight range between $2 and $5 for the past year. Simply Wall Street's valuation is $4.48. They say the stock is 29% undervalued. 27 analysts priced this stock at $4.64. They also say it's undervalued. Their revenue is projected to grow a lot. In 2024, the projection is $2.8 billion, 2025, $3.3 billion, 2026, $3.8 billion. And their free cash flow is projected to be positive, hitting $593 million by 2026. Their debt peaked in 2021 at $14 billion. Usually when a company goes public, they use a lot of that cash to pay down debt. And it looks like they did that. They brought their debt down a lot. It's now $800 million. And you can see they had negative equity for a couple of years. It turned positive in 2021. Now their equity is a good amount higher than their debt. And this green line is their cash, which is similar to their equity. There's no salary information on Anthony Tan, the CEO, but he's been CEO over 12 years. 37% of the companies held by institutions, 24% by public companies, 21% by the general public, 14% by VC and private equity firms, and 3% by insiders. Masayoshi Son's SoftBank owns 14% of this company, Uber 14%, Toyota 5.7%, Morgan Stanley 5.2%, Didi, the Uber of China, owns 5%, MUFG, Mitsubishi, Japan's largest bank, owns 3.6%, BlackRock 2.5%, looks like the CEO owns 2.2%, Invesco 1.1%, Artisan 0.6%, and Geode 0.4%. Their employee count is up from 8,400 to 12,000. The ticker trades on the Nasdaq and Deutsche Börse. So let me know what you think. Give the video a like, subscribe, or comment below. If you'd like to get a custom valuation or just support the channel, you can become a member by clicking on the link in the description below. Thanks for watching.